business, work on their exit planning, increase the value of their business on as they're planning their exit. So today, what I want to talk about is how do you go about valuing your business? And this is a very loaded question, very complicated and tough to do because, as I'm going to explain here, there are many ways that you can calculate the value of your business. But ultimately, the value of your business comes down to what is someone willing to pay for it? Just like a lot of investments that you get into, you may be able to put money into it. It may grow in value, but the reality is, what is someone willing to pay for that investment at the time that you are ready to part with that investment? So that's the difficult part. So the good news is in business, in any business, there are just a handful of metrics that you can take a look at that will increase the value of your business. So it's things like profitability in your business. It's having long-standing contracts. It's that recurring revenue that you have in your business. It's having a strong employee team, management team, especially who can run the business without the owner's involvement. So a strong management team, really good balance sheet is helpful for increasing the value of the business. Having systems, processes, and procedures in place. So if I were to come in and ask, tell me how you get new clients. What's your process for getting new clients or new customers? And if you can pull the binder off the shelf or show me the plan, and show that it works, that you're actually bringing in new customers and new clients, those kinds of things, those systems that run your business, those are the things that increase the value of your business. So when it comes to valuing the business, the value is going to start with a baseline, and that baseline is going to be based on a choice of some numbers here. It's going to be based on what your profitability is in your business. It's going to be based on what the revenue is in the business, or another number. It could be based on. It could be based on. You've heard the terms either EBITDA, the earnings before income tax depreciation and amortization, or it could be based on the SDE, the seller discretionary expenses. And those, all of those, or both of those calculations take into account expenses that occur in the business that they're kind of discretionary. They may not be there. The new owner may not want to take on those same expenses. So you put those expenses back into the calculation of profitability. That increases what it looks like for profitability, but it's called recasting. It's that SDE or EBITDA. So you take that number as your basis. The next step, no matter what you choose, revenue, profitability, or the recast profitability, no matter what you choose, then typically you add a multiplier to it. And that multiplier can fluctuate based on industry. It could fluctuate based on location, where you are in the US. Mostly, though, it's going to fluctuate based on the relative strength of your business, meaning all those other metrics that I talked about that you can use to increase the value of your business. So there are industries out there where the multiplier of that number, revenue, profitability, or recast profitability, there are some industries where that multiplier is actually a fraction of one. It could be 80% or 90% of that number. Some industries only have one as a multiplier. There are other industries, though, that are more in demand, and so supply and demand comes into play when you're valuing your business as well. Right now, there are a lot of investors out there who are looking for software as a service companies. Can you put up a software package, sell it to people for recurring revenue, and it's administered only in the cloud? Those are very popular, and so they get multiples of 5, 6, 7 for those sales. So popularity can even influence the multiplier of your business. Some industries, it's very common to take the revenue and to discount the revenue. So if you've got a business that earns $1 million in a year, for those industries, the way that they calculate that is discounted off of that revenue. So it might be 90% of revenue. It might be 80%, 75%. Just depends on the industry. So things are so different there. You could take a look at fair market value. What's the value of all of your assets, or what's the value of your stock or shares in your company? That would be another way to value your business. So you can see this gets really complicated. And business brokers struggle with this, bankers struggle with this, accountants struggle with this. It's why you could go to each of those, a banker, a lawyer, an accountant, and a business broker, and say, what's my business worth? And you're going to get different answers from every single one of them. And this is why you get those different answers. Ultimately, what it comes down to is, what is someone willing to pay for your business? That's what really determines the value of your business. Now, McCrane Associates, what we do is we focus on those things that do add value to your business. So we focus on those drivers of having that recurring revenue, a strong management team, creating those processes and procedures, it's systematizing your business, those kinds of things. So that's how we add value to your business, increasing the profitability, putting it in a position where it can actually scale and grow. That's what we do. So if you'd like to have a conversation with that, here's my phone number. Here's my email address. Feel free to reach out. I'd love to have a conversation with you about what we can do to help you increase value in your business. So this has been a longer video today. Sorry about that, but so much I could say about valuing business. But I'm going to stop there. So with that,